Most traders spend their entire careers staring at price candles, wondering when their perfect setups keep failing. They see a green candle and they buy, they see a red candle and they sell, but price is just the final result. If you want to actually understand market positioning and see who is trapped and who is in control, you need to look at the engine under the hood. Today I'm going to show you how to use open interest and the Velo platform to gain a deeper perspective on the market. This isn't a holy grail or a 100% win rate indicator, but it's the first step in building a professional or more professional trading edge. So welcome to Double Edge. Today, before we dive in, let's keep it very simple. What is open interest? Unlike volume, which shows how many trades happen in a specific time, the open interest measures the total number of active contracts currently held by traders. So think of it as a market commitment. When open interest increases, new money is entering, people are opening new positions, and when open interest decreases, traders are closing their doors and leaving the market. By watching open interest, we aren't just looking at where the price is, and we are looking at how traders are positioned and how much fuel is left in the move. So yeah, and I want to be very clear about it. Open interest is not a magic crystal ball. There is no such thing as a 100% indicator in trading. To build a high probability trade, you need to have full picture. You have to combine open interest with price action, funding rates, liquidation, CVDs, which is cumulative volume delta. Each of these tell us different part of the story. Today we are focusing on the foundation open interest, so you can understand this piece perfectly before we start layering in the rest of the data. So there are four main situations what you can find in the markets or in the charts, especially Velo charts, when you use open interest. The first situation is usually situation when price is going up and open interest is going up. Usually this is, many people think this is a sign to buy. It depends, but we see at a sign that it could be usually overcrowded trade. When open interest grows much faster than the price, it means latecomers are jumping into high leverage trades. It usually, these trades are very sensitive the moment the price stalls and not continuation higher, and you will see some wicks into the resistance or something like that. The buyers usually stacked and in the wicks, so they start to panic, and this creates a long squeeze potential. We use this to identify when a trend is becoming top heavy and risky. So this is the first situation. The second situation is when open interest is rising and pricing action is going down. This shows us that aggressive sellers are chasing the move down. They are opening new shorts at the very bottom of the move. If the price reaches, usually at the bottom of the move, so if the price reaches a key support level and the open interest start to flatten out, it tells us the sellers are exhausted. As soon as the price ticks up, those shorts are forced to buy back. Fueling violent, usually you will find the name of like V-shape recovery, and yeah, this is the second scenario. The third one is short covering. Usually when price is going up, open interest is failing. This is a short squeeze or classic. The price isn't rising because of new strong buyers. It's rising because short sellers are paying forced to close their long positions. So they are buying back out of necessity, not conviction. This move is usually fast but unsustainable. So once the last short is squeezed, the price often collapsed because there are no real buyers, so left to support it. And the last one from the main four is the flash market reset. When price and open is above are failing, we are witnessing a long liquidations or flash. Longs are being forced out while it looks back bad on the chart. This is actually a healthy reset. In many cases it clears the weak hands, so yeah, this is high. The high leverage is going out of the system. Once the OI hits floor, the market is light again. This is often where the most sustainable moves start because the forced selling is over. There are two more. It's like number 5 and number 6. Number 5 is above are the similar that the price action is going more like sideways, and the 5 is this is the most important or very often important setup to watch when the price is stuck in a range but open interest is building aggressively. Yeah, here. So it means big players are accumulating or distributing. They are using limit orders usually usually to keep the price stable while they are building massive positions. We call this the I don't know, I see something like coiling spring or something like this. It was on Twitter. So the longer this lasts, the more violent the eventual breakouts will be. This is where we prepare for a major move. And the last one is usually spot absorption scenario. When price is sideways as before and open interest is dropping, usually when open interest drops, it means leverage is exiting, resetting or flashing or whatever, which should push the price down. But if the price stays flat, it means a spot buyer is sitting here, absorbing every single sell order, and they are building a solid floor with real money or leverage. Once the leverage is fully flashed and only spot holders remain, the market is primed for massive sustainable pump. So this is the some major stuff what you need to know about the open interest. I really highly recommend to look at it more deeper and look into the charts, and I will show you a few examples in BTC in a couple of last days. The most important what I just showed you a few minutes ago. So this is the BTC simple price action. This bottom indicator is open interest aggregated. You can find it here in indicators on Velo. So you just click on aggregated open interest. It's basic. You don't need to switch anything. Just put it in the coins because it's more accurate. When you will switch in the dollars, it's not so accurate. So I more recommend the coins, candles. Yeah, this is the everything is set down and we can look in the charts. So as I said before, the open interest is tell you more about the positioning in the markets. The first scenario was when I switch open interest up, price action up. So if you remember, it is this case, for example, when open interest is rising and price action is rising, and you can see in this example in Bitcoin, when price action reach some level of resistance and open interest aggressively pile higher, you can see the price not continue higher, but it's usually the late longs are chasing the price, and it's really often the fade situation. It's good to looking for shorts. Usually market is overheated, but it depends on many cases. It's not just the simple, because as I said before, it depends on how many percentage is added in OA, on open interest and in price action. So you need to figure out if this trend is more healthy, because when you have like 1% in OI and 1% in price action, it's more healthy than 5% in or 1% in price action move up and 10% in OI. So yeah, this is the main difference. You need to recognize which what is aggressive, what not. But in this case, you can see that open interest was really huge. It was really a lot of positioning, like 10,000 in coins, and price action just moved like, I don't know, it was like 2%, maybe 3. We can look. Yeah, 3%. So yeah, you can see this is the first example. So this is very often a great sign for fade when OI is really retarded, but in this case was also decent fade setup, but it depends in other conditions. But yeah, this is the first. The second one is when open interest is up and price action is down. So we will find some scenario when open interest is up, it's here, and price is down. It was the Friday setup. Friday's a long setup for me. I was longing this situation, and it's very simple. Price was pushed lower because when open interest is, as I said before, rising and price is going down, it means like more aggressive shorts are piling into the market. So you can see that once price took this low, some decent level, it was like support. So price find bottom, start bouncing, and open interest start flashing. So this is the next one. But as I said, when you will see a huge rising in open interest and the price is going down, it's usually sign that once the price find the bottom and shorts start closing their positions, it's very often great scenario for going to long. The third one is open interest down, price action up. It's we can also I can show you in this example is the great. This was the second when OI is up and then OI is down and price action is up. It means as I said before, this is a huge aggressive shorts piling in. Once they're realize that the price is not probably going lower, they started very often close their positioning, not very often their choice. They could be liquidated by, I don't know, some heavier spot buyers or whatever. So in this case you can see they started to closing and price starting to bouncing, because when you close the shorts you are becoming the long. So this is the very often great understand for prices bouncing. And yeah, this is the third one. And the fourth one is OI, open interest down and price action is down. We will look and in the chart which one I want to show you. It was, I think so, it was, yeah, this situation. It's very great situation. And in this situation, you can see that a huge amount of open interest was out of the market or leaving the exit the market, and price action was like, yeah, a little down more, but definitely this portion of open interest is much bigger than this portion of price action. So yeah, is the question, it is the like healthy the leveraging, then the leverage is going out and some spot buyers holding price or limit orders start to support lifting the price. In this cases you can see that price then more aggressive short sellers push it lower, but then price again back to this region. So this is again, as I said before, in when is open interest up and price action is up, it depends on many circumstances, not just this open interest and price action, but you need to make a whole picture about what is happening. But when we just purely focusing in these cases, I will find this situation more like a healthy, because I think so that this is like a really big portion. Price action is really I don't know, it's it's a little bit down, but we find some level, and I'm expecting that this is a really strong level. So for me this is more like a great sign for looking for longs more rather than looking for some shorts. So this is just some simple explanation what you can find in Velo charts, and understanding these 6 scenarios gives you a massive advantage over someone just staring at candles. But remember, this is just one piece of the puzzle. So in the future videos we will layer in funding rates to see who is paying whom, and CVD to see who is being more aggressive. So if you want to start seeing the market's positioning instead, or just simple price action, I've linked the Velo platform in the description. You can also find our Discord server where we are talking about trades and we are more active. Also you can find us on Twitter. We are sharing the setups and everything about the training. So if you like the video, hit the like button. It was simplify the concept for you, I think so. The subscribe the double H to see how put the whole puzzle together. And if you want trade smarter, I will see you in the next one.